Okay, good afternoon, everybody. This is Dennis Wilborn with the Active Trend Trader. I want to welcome you to How to Make Money Trading Stocks and Options, plus some trading tips. With us today, thank goodness, is Steve Ferrara, who's basically, we're going to talk a little bit about why he doesn't have a stock pick today, because I agree with it. I've been looking. I've got several candidates, Steve, to trade to the downside.
Okay.
However,
Okay, I agree.
However, you did mention one. Are you going to talk a little bit about CHGG?
We can. Yep.
Okay, that's one I would love for us to be able to talk about. And so let's go ahead and push the go button. I want to welcome everybody again. So what are we looking at? Basically, we're in a situation where we don't want to just survive. We want to thrive in all the markets. And so not on the radar, but the How to Make Money Trading Stocks and Options, what we want to focus on, we do it every Friday at 11 a.m. Pacific, a couple hours before the markets close. And we want to do a real quick market index review, master trading tip, and then also a stock pick and an overview of the market itself. And so one of the things that has been on everybody's mind, and you guys can just type in and lay it in the comments section. If you're joining us on YouTube, please make some comments about this. One, you're all aware that Wall Street Bets, which is a social media group that has basically been several of the social media groups that trade stocks have been actually shut down by big tech to basically so they can't communicate with each other. But anyway, they came up with a brilliant, and I do mean brilliant, idea that to identify stocks that were very heavily shorted by the institutions and start buying those stocks up. What transpired with that then was as these millions of individual retail investors started buying up the shares of these beat down stocks that the institutions were shorting, all of a sudden short squeezes started happening, and you saw rocket ship type of rocket moves on all of these, like GameStop, perhaps a little bit on some moves also on BlackBerry and also AMC. So let's just take a real quick look at GME. And so why do I say it was a brilliant move? Well, I mean, this thing is up over 1,000% in just over the last couple of weeks. And so the ploy that they had to basically force the institutions to start, moving in and covering their shorts worked really well. And so some of them benefited really, strongly. Now, I haven't seen a lot of charts like this since 1998, 1999, and 2000, right before the dot-com bubble burst. And one of the things that I take away from this is, one, yeah, this was like I said, a very brilliant strategy on the part of these guys to force the hedge funds into covering their shorts. And then they had to cover their shorts, and then they had to clean out their shorts, and which was very interesting. However, once a strategy is basically known, especially a strategy like this, it will lose its effectiveness very quickly for a couple of different reasons. One, people will expect it's coming, and then also the institutions and the FEC basically started slapping restrictions, saying, no, you can't do it. I tried to do basically a bear. I wanted to do a bear call spread or a put spread this morning.
Bull put, probably.
Huh?
Probably did a bull put. Try to do a bull put or put
Yeah,
calendar.
but anyway, I tried to jump on it with a bull put spread, a credit spread, and they, Thinkorswim wouldn't let me, or TD Ameritrade wouldn't let me place the trade. They said, no, this is too risky. So the question is, that I have for you guys, is the restrictions put on by the brokerages, was it right or was it wrong? Or should they have let the market just decide? And so, you please put down in your comments what you think. Was it right or was it wrong? For them to put the restrictions on that they did. And so Eric says, Thinkorswim paused their trading from buying these stocks just like Robinhood. Yeah. And also, do you think Robinhood, I was just starting to investigate Robinhood a little bit. Do you think Robinhood's going to go in the toilet? Because they have a lot of very ticked off members right now for what had happened. Protect the big boys in deep pockets. Okay, you rowdy guys, you just, throwing it out there. Anyway, that's where we go. Hey, let's jump back into, I'm not going to go any deeper than that, Jeff. If you want to see some of the thought, I thought we'd be able to do some either bull or bearish trades on one of these, like GameStop and or AMC, or maybe maybe still be able to do some on BlackBerry. But dadgummit, they slapped the restrictions on it, so it may not be possible. I think part of the thing that Steve just says there, the thing about it is they changed the rules in the middle of the game. And it looks like they changed the rules to protect who? Or was that whom? To protect the hedge funds, which, and because apparently some of the hedge funds, they were really hurting big time. So let's jump into what else we got coming up here. So here's your tip for today: how to target, shoot entries and exits using moving averages. One, it's very first, you got to determine which moving average price action is respecting. In other words, on any type of move up or down, you'll see that price action will pull up to a particular moving average typically and then reverse off of it, either to the upside or the downside. That gives you a clue on which of the moving averages that are respecting, and then you can start planning a trade around that. Two, the moving average acting as, define what the moving average that is acting as support or resistance. Three, project where the moving averages will be. I covered this in one of my live sessions a couple of times this week. And it's a matter of just drawing some parallel lines to identify that when we get over to the charts. And lastly, plan conditional orders around these or this action value zone that you've defined. And what that'll do for you, it'll help you from chasing prices. It will enable you to basically do more buying at wholesale rather than retail, and it sets you up to be able, and it basically also puts us closer to our stop losses, which helps us control our risk. And so I really like this approach. So the last two things is, what one trade habit that you've identified during the month of, last year and into the month of January, what one trade habit would you change to be more consistent and profitable in 2021? And if you just want to lay that down in the comments, I'd appreciate it. Now let's get over and take a look at what's going on in the markets. We're up about 1.3%. NASDAQ, when I took the snapshot, the Dow was down year to date, S&P down. So we have a mixed market. Russell still running up and doing great things. Let's run over here to it is pretty amazing. Steve, were you trading back in 1998, 99, and 2000?
Absolutely.
Yeah. Doesn't this chart kind of remind you of what?
A lot of charts would look like that. Yeah.
Yeah. I mean, people would get in and they would, they'd have the IPO and it would just take off like a rocket ship.
Right.
So the
One
rocket
thing
ride.
that's different though is I think many more people were trading back in the earlier period.
You think
everybody, the janitor, the secretaries,
Yeah.
everybody talking about stocks.
Well, that's what's really funny. That's one thing I'm keeping my ear to the ground about.
Right.
For anybody to say, is it, saying that, well, it's going to be different this time? Because that was kind of a clue during those 2 years running up into the burst of the bubble.
Right.
People saying, oh, it's going to be different. Companies don't need earnings. They don't need a product to sell. It's going to be, and so I haven't heard that per se.
Yeah.
But let me tell you, there's one thing I have learned over the the last about 2 months is there's a young group of traders out there who trade differently than their predecessor, and sometimes it's good, sometimes it's bad. I see a lot of them are trading a lot of strategies but not having a plan.
Right.
So that's going to run in, that's a train wreck waiting for a place to happen.
Yeah.
However, one of the things that they are doing is, and we're going to be going into this with our active trend trading, is how do you place orders on your phone? And they are very good at, not only they're very good at texting, but they get their alert, they slap it into their phone and place their orders, even if it's only for 2 or 3 shares.
Right.
And so, and so it's very interesting, but it's a new dynamic.
Right.
So we'll see how.
I think also what we saw the last few days with GameStop, it's the same kind of group of people getting involved in the market. It's kind of got that euphoria feel, with them, I think.
Yeah, I wrote that down yesterday. It was the old. What did I do with it? The irrational exuberance. That,
right.
It's kind of like that. So anyway,
right. I agree.
So, okay, hey, let's jump over and look at the charts.
Sure.
This S&P weekly chart on the left, daily chart on the right. As you can see, we are pushing down, and we highlighted this last week that if we break below the 34 and out of this uptrending channel, we're probably going to go down here and test the 50. Sure enough, we tested the 50 today. Per the momentum indicators, it looks like we may still have some further downside to go. Once the market forecast momentum indicator, the intermediate one or the longer term one, turns over, oftentimes it will have a bias to the downside for quite some time. And so when that happens, you want to be looking for pullbacks up into the moving averages and or past areas of support that is now resistance to trade basically to the downside. Weekly wise, bearish engulfing over, and it's covering 1, 2, 3, 4 weeks. Basically, it's wiping out everything that happened in the market on the S&P for the beginning of the year. Looking at Qs. Okay, Qs. Not a bearish engulfing on the weekly chart, but it is a dark cloud, and it's stopping right at the 8-period moving average, which corresponds on the daily chart to somewhere between the 34 and the 50-day moving average. So we have stopped there. However, again, TSI, the momentum TSI has rolled over and crossed to the downside on the weekly chart. The market forecast longer term indicator is also rolling over. Now it may do and I will look to trade either the Qs and or Steve, I'll be looking at either trading the Qs to the upside or actually to the downside also, but I'm looking for a pullback into these moving averages. This is what I was talking about to you folks, is when price action has identified a moving average that it's going to support, I want to know where that's going to be. Oftentimes, traders will identify, okay, the moving average, the 20-week moving average is at $299. That's all well and good. That's this week. Where's it going to be next week? And what I encourage you to do is just learn how to do this little diagonal split here. There's a couple of different ways you can, well, I'm just going to show you this simple way. I'm just going to go in here. I'm going to draw a line in here, just kind of, not kind of, but paralleling or trying to draw it right on top of it. Not going to be exactly perfect, but that's pretty darn good right there. There we go. And so next week, what this tells me, it tells me that, the 20-week moving average is going to be about 301. And so I can start utilizing that information to say, okay, if I get a retracement all the way down to there, and or I can put in an alert, that's where I want to take action. That defines a brand new action zone for me. And I can also do the same thing here, extending the 8-week moving average at the same time as you see what's happening over here on the daily chart. 820, the jackhammer effect has taken, it has started to happen. The 820 have rolled over to the downside. We are still in the bottom of the channel, but I can take and extend what? I want to extend the 50 up a little bit. Yeah, we're not going to do a Fibonacci on that. And again, this is just a little technical tip on, there you go. Now I've got an idea of where the 50 is going to be on Monday. And it's going to be down at around 308, 309, 81. And I can continue it up. And we're just watching this continue to move down. So if you don't use that little hack or that little trick, I encourage you to start practicing with it. It gets you a lot closer to where you want to be taking action. Let that identify your action value zone. And last but not least, Steve, I'm looking at IWM. No, IWM. I get going so fast sometimes. IWM is closing. Let me get rid of the fib right now. But we're inside the magic fib box. That's the 50% retracement. Isn't it interesting? Somebody's telling me the other day that fibs didn't work. And I said, really? And so I started showing some charts and I go, oh. But look what's going on here. It's stopping right at the 50-day moving average, a former level of support. And then where's the next level? At somewhere between the 34, I like the 618. So I'm looking for a potential pullback all the way to the 201 level on IWM. That's about $6 below where we are right now. If that busts, then we're going to drop down here. Look at the 78% retracement. It's right there at what? The 50-day moving average. So that's what I've got on the indexes, Steve. Now let me throw up, I'm not going to, well, never mind. CHGG. Tell me what you like about CHGG.
Well, I don't like it today, but I think the market is, I don't know what it's going to do, either break lower or bounce off this area and go higher.
Yeah.
It'll probably get resolved next week.
Hold on a second.
Until it does, Chegg is one stock I'm following. I like its holding in the face of weakness.
Yeah.
It's got a pullback to the prior breakout area, and I see it potentially long if the market doesn't break down. So we need to have that resolution first, I think.
Okay. So what would be your trigger to get into a trade on CHGG?
Not strictly on the chart itself. It's a combination of what the market's doing and then what Chegg is doing. For Chegg itself, I'd like to see a break above the bar 2 days ago.
Okay, that would be
my entry trigger. Yeah.
Okay, cool. Yeah. And so notice what Steve's doing, guys. I want to highlight this to you. Is he's talking about a break above the low day. See the low here? Yeah. That's lower than anything. So a move back above the low day, and that is classic technical analysis. And I think it's in there, some of the Wyckoff training in there also, Steve.
Yeah. Yep.
And so awesome. I like that. So here's one that I like. CHGG is a stock that we bought into this week on the top 5 list. We bought it down here at about $92 or $91 to $92 down in here, off of the 34-day moving average.
Sure.
So we're in a trade on this right now, waiting for it to break out. Our stop loss is just immediately below this low right there.
Yeah.
And so that's what got us into that. I like Facebook. I mean, I do and
too,
I don't.
actually.
What's that?
I also like it. Yeah.
I like Facebook, but do you like it to the upside or the downside?
Well, it can go either way. I like it to the upside. It was looking good yesterday, but today it's come apart.
Yeah. And so, with that in mind, it's okay. And Steve just brought some up very much is very important is it's okay to like something both to the long side and the upside, but you just define where on the chart you would make a potential decision for that.
I agree.
Hold on, I got an alert going off. There we go. That's over with. So you would look at and I'm going to see if I can read Steve's mind. Is down here at the 200-day moving average. If that holds,
Correct.
And this support over here holds, he would be looking at potentially getting long in that little box there.
Correct.
Somewhere in there.
Correct.
Now, let me throw out where I would be. Let's say it doesn't get down there immediately, but it runs back up. What I would be looking for is a bounce into these moving averages will act as strong resistance.
Correct.
Notice that they're all pointing down now. And when the moving averages start pointing down, they turn into a roof, if you will, where price action will bounce up into it and then reverse and bounce down.
Right.
That also, what's that?
That's correct. I agree with you.
And what also is interesting is go over here to the weekly chart. Look at the same thing, the 8 and the 20 right there. Whoops, I don't want it right there. But the 820 is right there in those. Oh, you booger. I got it put where it snaps to the high or the low.
Right.
There we go. There. Now I can do it. So I can just draw a line right in there. That's about where those are.
Yeah.
Right? And look where they are. Right close to where the moving averages are. And a matter of fact, if I do the trajectory to the downside, it may, in fact, on Monday or Tuesday, hit that area.
Right.
So, again, if we pull back up into the moving averages first, you could basically look to trade something to the downside. And, would that be a risky trade? Well, every trade has some risk. But it's about $15 back up to this level. Today's candlestick is 1171. So cool stuff. Yeah. Thanks, Steve. I think we've given the folks some food for thought.
Yeah.
Moving into next week. And so let's go ahead and close this out. We ran a little bit over. Hey, we got something special coming in with active trend trading. We've got basically a new AutoPilot trading plan, and it's basically using the 7 best leverage ETF opportunities. If you're a premium member of active trend trading, you will already get this, but this is going to be offered as a separate service to go along with the top 5 service, 2 separate items. And so we will be doing an introductory webinar on February 6th. So watch your emails for details. And with that, I just want to say, hey, 2021, a year of reset and wealth building. And so, Steve, thank you very much for joining us today. And thanks, everybody, for being here.
My pleasure.
And good luck with you're going to do a webinar here yourself. And so if you need to jump off, that's cool. And so remember, aloha, trade well, prosper, keep sharpening the saw, and keep your stops close, and let your profits run. Aloha, and God bless everybody. See ya.